Hello and welcome to a Bevington Group digital white paper. Now, a digital white paper is effectively a presentation on a subject that is of relevance at the time. And this is a very important AI subject, which is how can we get a financial return from AI? The digital white paper is in a format where it will be less than 20 minutes or very close to 20 minutes, but generally under 20 minutes. Be short, sharp, and hopefully very helpful. The paper itself can be downloaded, but of course, there will be some things I say which are not on the paper. So I'm going to get started, and I'll start with an introduction. My name is Roger Perry. I'm the CEO of the Bevington Group, which is also part of the Argonne Group, and we are the strategic design practice of Argonne and Co. Today, we're going to talk quickly about the state of the market, very quickly. I'll say less than is on the slides, but you'll be able to check the slides out later. Talk about why continue to invest in AI. Talk about re-engineering the work, which turns out to be critical to get a return. Some fundamental strategies and a couple of use cases, and then what a well-considered deployment looks like. So let's go through quickly. So there's a huge amount of money going into AI, trillions of dollars by the end of 26. And the reality is that the research is indication that it hasn't made much of an impact on the economy yet. It has done to markets. So share prices are impacted, particularly for agencies or enterprises that are offering AI. However, it hasn't had a massive impact on the economy yet. And there are many organizations that are not yet reporting a return. Now, there may be all sorts of things happening here, and we'll explain some of the theories as to what's happening. But one of the most common theories is that it's a J curve, money's being spent, and there are losses initially, no returns, and then you quickly have a return. We'll test that theory as we go through this pack. But whilst some are optimistic, not everyone's optimistic, and we'll mention these briefly as we go through, because there are those who say that actually the architecture of AI will not suit some of the deep problem solving that ends up saving money. You'll see we don't believe this to be true, and we have reasons why, mainly that we see it does save you money actually in practice, or it does actually add value in practice, or you can do more effectively in practice. There's advanced node capacity argument, which is we don't have enough capacity. Again, I think there's a way around that, and the way around that is appearing already in models that basically can be right-sized. AI technology is expensive, yes, but then it comes to right-sizing the models and using it intelligently. There are those who talk about AI bubbles. We say there are companies who will absolutely lose money on this, but it still will change the world. The internet changed the world, but many companies went broke as part of that journey, but it did change the world. So there are those who have taken a very strong position counter to AI being a world changer, but you'll note the dates on many of these are a little older. It's becoming less and less common. But one thing that is common is the point made that the financial return aspect is difficult. But yet, investments continuing at a pace. Is this irrational? Well, not according to some CEOs. And we're now getting into the space where we're going to talk about the believers. And I don't think you need to be religious in this to be a believer. I think it's just a matter of actually looking what they can do and checking out the use cases and understand what they do and what is possible. And there's no question that use cases are now in place which are adding a lot of value. We know because we're seeing them all the time. And CEOs of various sorts are not speaking very, very bullishly about the use of AI. So there are a range of quotes there, including those from the likes of Salesforce, who are saying we will reduce our hiring of engineers this year due to the use of AI. There is Matt Corman here in Australia saying there's a big difference between companies that are navigating that transition well and those that are navigating it unsuccessfully. But Matt's on record by saying that he thinks this will have a big impact. It's just a matter of when. So you can download this. I'll leave you to read the quotes at your leisure, and I'll go right to the main points. So money's being spent. but concerns over returns. What do we think is happening? Well, it's really Amara's law is happening. And this is a law that says we tend to overestimate the effect of technology in the short run and underestimate the effect in the long run. We think this is what's happening here. So people got enthusiastic and thought, well, maybe there'd be an earlier return. We're still in the very early stages of this, albeit we do think with some of the later models, they are so powerful that you're actually seeing really, really big effects now already. But still, Amara's law, we probably overestimate the short term, underestimating the long term. If we think about this as an industry change, as an industry revolution, if industry 1.0 was steam, if 2.0 was electrification, if 3.0 was computers, electronics, if 4.0 was internet, we're at number 5. And the argument that many have is that this is a 5.0. It will change the world, but also that this will go faster than many other transitions. We'll still have Amara's law applying, but it will happen sooner. So I think that's likely to be the case. I think, for example, that industry 3, 4, they were faster than the deployment of 1 and 2 in terms of value. Railway lines took time, for example, but notwithstanding that, they did change the face of countries. So internet bubble, it was a real thing, but the internet did change the world, a point I've made earlier. And let's now talk about some of the features that actually lead you to get a return. So the most important thing that we have found in the work, and what the research is also saying, and this one's from MIT, is that you actually need to think about the structure of the work. Just stacking on AI or slapping on AI and hoping for the best is simply not going to work. It's important to start with the work. What do you want to change? Consider the full tech stack. Well, it's AI and other technologies. You will be using both. Work backwards. So what's the end you want, and work backwards towards your ROI. You will have freed capacity, and you will need to design work and workforce to meet that freed capacity. So in essence, this is saying that just applying AI is insufficient in many cases. There are cases where it's actually the case you can slap it on, but in reality, you've got to change the work itself. So that's something to get good at, according to MIT Sloan. And if you do, you're much more likely to get a return on investment. So that means deconstructing the work, redeploying, matching tasks to tech and which tasks are done by humans, and then reconstruct in a blended way. So agents and humans work well together. This is lesson number 1. There's an example on the right-hand side. There are now many emergent examples of this, but certainly returns can be achieved, and very substantial returns as well. One point we'll make, as we head from individual agents and effectively just typing in a query to ChatGPT, autonomy is going to be a bigger impact. In other words, the more we get to agents that can run themselves under the supervision of another agents, the more likely it is that what we're actually doing is re-engineering whole processes. So the more sophisticated the deployment and the more autonomous the deployment, the more likely you will be to have to re-engineer the work itself. Now, all of this, of course, requires change management. So if big lesson 1 is you've got to re-engineer the work, big lesson 2, to get it to work with the re-engineering, you have to do good change management. This is no different, actually, from the principles of other types of change. There are 4 key change management issues that affect AI adoption: lack of clear objectives, employee, including management resistance, poor governance, and insufficient measurement. All 4 of those failures actually apply in other projects. So why not have them apply here? And they certainly do. So we have some points for you to consider in change management, but we're not going to go into them in depth here. Again, you can download the pack. All right. So what do we think are the sensible strategies for use? Well, the first thing is to think about things differently, which is there's everyday AI, and then there's targeted value creating enterprise AI. So on the first side, it's everything from embedding AI into your spreadsheets, or using ChatGPT in a prompt, or using Claude to create an agent that specifically targets one of your needs, be it reading or responding to emails or whatever you want it to do. You can do a great deal more than that. I've just been using Claude recently to build into our business cases. So from publicly available information, it's very interesting what can be done. But that's really an example of everyday AI. So it's often particularly valuable for knowledge workers. Now, targeted AI is at scale. And this is where you need it to work at scale. Many people will use the agent, or the agent will run autonomously on your data or autonomously interact with your customers. It is at scale and it is big returns. Now, it's important to separate the two, kind of personal use and kind of enterprise use, because they're different in sense of what returns you'll get from them. So for everyday use, it's corporate executives, middle managers, and team. For strategy two, or targeted enterprise use, it's the entire value driver tree, which is this second bubble that's being impacted. So one way to approach this to make sure you're getting value is not to start with the technology, but to start with your value driver tree. Now, there are other pieces of information available on our website. You can check our webinars, and our website basically will talk about different webinars you can download. And a value driver tree is a way of splitting down a value. So that's on the left-hand side into its component parts. So for example, profit, revenue, and cost. Cost, you split it into different costs. It might be a property cost. It might be a legal cost. It might be a staffing cost. It might be a machine cost. Whatever it happens to be, you pop it in the value driver tree, and you can break those costs down even further. So that's strategy two, and it's big scale. And what you need to do with strategy two is not start with the tech, start with the problem or the opportunity, and that gets you there. So this is about being selective. Be strategic about where you want to play. Choose where you want to play for the enterprise scale use of AI, and then run a filter through it. And there are many filters you can run through to try to prioritize them, because you'll have more opportunities than you can poke a stick at. Cost, speed to implement, risk exposure, benefits and scalability and adoption are some of the filters that you can pump through. This will all be available for you on the presentation pack that goes with this presentation, so no need to take notes. Now, as of today, these are the big eight. These are the different types of use cases that are emergent and very, very useful, everything from rostering through to knowledge work activity like writing code. But these are going to change, and they're changing before our very eyes at this particular point in time. So the big eight is not just something you can template. You have to look at your particular enterprise and your value driver tree. There are many examples. We've popped in one that's publicly available here, which is Vanguard. Vanguard Financial Services Wealth Management Advice business, and they've used it across different parts of their organization, looking for efficiency, empowering advisors, client experience, and investment intelligence. So very, very useful for them, as it will be inevitably for nearly everybody listening here. So taking that into account, what is our suggested approach? Well, don't take a tech-led approach. Get into the tech, understand the tech, but really focus on what business problems you want to solve, and then see where you can get the technology to apply. This is particularly the case for targeted enterprise AI. I actually think one of the personal use case pieces are very, very good to do, because you get a sense of the power and the strength of AI and what it can do and what it can't do. And it certainly helps me with my personal productivity. But the business-led AI, the enterprise scale stuff, start with the business solution. There are 4 steps if you're dealing with an external partner, someone like us, that you want to go through. You want to identify value and establish a portfolio. Portfolios are important because not all AI projects will succeed. Many will, but they certainly won't all. So you do need a portfolio so that you get a balanced result. And they should be, for enterprise projects, focused on your value driver tree and where there's value. Restructure roles and process. You've got to restructure the work in many cases to be able to get value, incorporate the lessons into other projects, and transfer capabilities. So your staff need to be learning how to do this themselves. There's lots of emerging evidence to support this approach. I'll leave that with you to review on your own as you whip through the presentation. And in summary, because this is a fast presentation, take a business-led approach, particularly for those enterprise approaches. Start with economic value, redesign the work, and manage AI as a portfolio. Three big lessons come out of it. So start with economic value, redesign the work, and manage AI as a portfolio. And then everyday AI needs to be treated a bit differently from targeted AI. And here ends this particular presentation. Thank you.